Hello everyone, welcome to another episode of JFX. I just want to officially thank everyone who, took out time to help me find a new, video recorder. It's been a really tough week, from the YouTube restrictions down to my video recorder crashing and stuff like that. But thanks to you guys, I am able to get a new record and I'm back online. So with that, I'm going to be presenting to you guys the video as promised about other block. And as I said earlier in the Telegram channel, it's going to be a three episode section. All right. So this first section is going to be about other blocks, the difference between hidden other blocks and obvious other block. Okay. So if you haven't subscribed to the channel, please like and subscribe and drop your comment about this video below for more content like this. Okay. You need your motivation to keep doing this stuff. All right. So the best way you could motivate and help out is to give the subscribe button, a hit. All right. And if you would like to get my daily setup, because I do share my ideas most of the times on the Telegram channel, so you could check out the link below and join our Telegram channel to support the community. All right. So now back on what we have today. I'm going to be differentiating between um obvious order blocks and hidden order block. Okay. So as you all know, the obvious order block looks like this. All right. Yeah, the last green candle before the bearish candle which came into the market with the momentum, right? This is a bearish order block, right? Okay, so with this knowledge, you understand the price is likely going to return into the 50% of this order block, for the sell pressure to continue. That's the basic rule about another block, right? So which is this. I'm just trying it down my screen. You expect price to return back into the 50% of this and then continue to the downtrend only if there's a break of structure, right? So about that, when it comes to hidden order block is always within the wick of the candle, right? You see some guys, especially me, marking out another block presented within the wick of a candle. So you say something like this, and then you see the bearish momentum coming up right here, and this being a bullish candle, and you see me marking this as an order block instead of this. Okay, so now I'm going to differentiate between this and this. What's the difference? What's important? Why do people mark this more than this? Okay, so now an obvious order block, which you all know the rules. If there's a break of structure, you look for another block, take a trade from the 50% and place your entry at the 50% and your stop loss just above the high for price to return back down. But now when it comes to hidden order block, the hidden order block has three basic understanding when it comes to my own approach. Okay, you guys, I like to simplify stuff, so I'm just going to give this the simplest way as I can. All right, so the hidden order block comprises of a breaker block, a fair value gap, and an obvious order block just within this week, right? You find those three things always within this week. So now there are two other blocks within a hidden order block, right? Which is the breaker block and the order block itself. A breaker block is more like a reclaimed order block. If you don't know what that is, it's like a reclaimed order block, when price disrespects this and then returns back, something like that. To you could search on YouTube here to see a video about breaker blocks and get more understanding about that if you don't know what that is. So price is likely to react from the breaker or from the fair value gap, right? So now when it comes to hidden order block, you understand that the breaker block is found at the opening of the hidden order block, and the fair value gap is found just below the 50% of the hidden order block, and the order block itself is found above the 50% of the hidden order block. Okay, so this is three different concepts here. And most of the time, price mitigates the breaker before breaking structure, and then returns to mitigate the 50% of the order block, which is filling up the fair value gap and mitigating the order block at the 50%. Okay, so now when this happens, you expect price to react from here and not here. Now this is going to be used as a disguise, to trap traders who are expecting price to react from 50% of this obvious order block. So if you're a trader and you're taking trade from the obvious order block and your stop loss is above this high, you're going to get stopped out. But if it's above the obvious high, you might be safe. I don't know, but the risk reward is going to be a little messier. But when you understand this, you place a trade above this within the 50% of the hidden order block, which is your expecting price to react from over here after the mitigation of the breaker block, right? So you expect price to react from the 50% of the order block while you place a trade. So now I'm going to explain this in a live chat, and I just hope you understand this concept I just listed out while we go to the live chat. Okay, now this was a trade I took last week. Okay, so I just want to use this as an example because it was a clean trade which breaks down the whole concept. Okay, so now you see my screen. This was the markup. This is everything here. So I'm just going to do this on the higher time frame all over again and show you what I saw or why I marked this in the first place. So this was an hidden on the block. Okay, so price did not react from 50% of it. Instead, price reacted from the opening, which was the breaker block. Okay. So I'm not going to go below that because I'm trying to make this video as short as possible. Probably on the second episode, I'll break that down more. All right. So now I'm just going to clean all this and try to explain it more for you using the higher time frame. Okay. 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 So now I'm going to put this on replay mode and explain a little bit for you using this. Okay. All right. So on the daily, I found this when I came to GBP USD. I found this hidden order block right here, which mitigated another hidden order block, which was within this week. Okay, so now this was a break of structure. Okay, this previous day broke structure, which was the weekly low, I guess, and then I went to the 4 hour time frame, the previous weekly low. Sorry, I went to the 4 hour time frame and I saw this. Remember what I told you guys about the breaker block, the fair value gap, and then the main order block within the 50% of the week. So you could do this on any pair you wish as long as you understand the concept of it. Okay. So now this was my POI from the daily, right? So now with that, I now identify my fair value gap. Okay. So you see price came into this zone. This was the breaker zone, right? Filled a little bit of the 50%, the fair value gap, sorry, and then mitigated the breaker block, which means if price is returning back, it's going to be reacting at the 50% of this. Now, if you don't believe or you don't understand what I'm doing, let me just mark the whole order block up and then go back to the daily and show you what it looks like. You see? Now you see the opening has been mitigated, right? From this, the opening has been mitigated. So if price is going to be coming back up, it has to react on the 50% of this. So you see, this becomes invalid. And a lot of traders will be looking at taking a trade from this because they feel like this is the order block, but this has already been mitigated. All right. So now you understand that the fair value gap wasn't completely filled, which this is going to be used as an inducement for the 50% order block. If you don't know how an inducement work or what's an inducement, you could watch the previous video just below this, which is about structure and range, and difference between structure and inducement. Okay, liquidity and inducement is just below this video. Okay, so now you see price filled the fair value gap, mitigated the breaker block. So we have to have the other block, which is within this hidden order block right here. I'm not talking about this obvious because you could see clearly what happened on the daily is practically repeating itself. Same scenario happening back here. So what I did was this. I marked out the hidden order block. Okay, I always refer the hidden order block to the obvious order block because I feel like the obvious order block is a trap for the hidden order block. Okay, so now I went to the 1 hour time frame and I saw this. You see, an obvious order block on the 50% of the daily hidden order block. All right, so now you see this messy price action, which is actually the breaker block, and the fair value gap right here. So my POI had to be within this order block, right? So now I went to the 4 hour time frame, and then I was able to identify this, and then I waited for price to return back into my zone. I got the proper break of structure here, and price came back into my zone and gave a proper reaction, which I took a trade from. Right? A perfect reaction, actually, which I took a trade from, which was the 50%. Now, you see, price never respected this order block, instead, used it as an inducement also. Like I said, the obvious order block always below the obvious order block, always below the hidden order block, is always an inducement for the hidden order block above. So you see, this was used as an inducement right here, give a fake reaction, induce a lot of buy sellers, early sellers into the market here, stop them out. So this was a stop hunt. So which means this would look like this, you know, the lower time frame confirmation pattern on the lower time frame, right? Which would be this right here. And then price reacted, gave a perfect reaction and dropped, which you could see straight to take profit. So that was how I got this trade, and that is how I use other blocks, hidden other blocks when it comes to the market. Okay, so I just hope you have understood the difference between a hidden other block and an obvious other block. All right. So in the next video, I'm going to show you how to pick another block actually. So this video is just to give you the concept and the difference between the both of them. So now you understand that the hidden other block has both a breaker block, a fair value gap, another block itself within it. All right. While the obvious other block is just, the 50% normal usual shit you see online. Okay. So that's the difference between the both of them. And I just hope you've understood this and try to put this to practice. Try to understand this in the market. It's not a concept you just watch and then you expect to play out on your live trade. Okay. So practice this on your demo. Try to observe some other facts about the both of them and see the difference between the two of them. And then give me your feedback on what you think about this video in the comment section. And probably within this week, I'm going to be dropping the next episode about this. And then we could move on to the next and the next to come. So probably I've gotten a good recorder. As you could see, the voice is clear and everything. So I'm expecting more videos from me soon. And then, so you could subscribe on this channel to get notified. Hit the bell to get notified whenever I drop a new video, and we could get to this. So thank you for watching, and please like and subscribe to the channel. All right, get us to 1,000 subscribers. Okay, I'll see you guys around. Thanks for watching.